It's the midweek edition of Business Incorporated. Thank you for joining us. I'm Chimeze Obi Iwago. On the program today, CEOs of African capital markets call for greater integration and linkages between African markets. South Africa's Sasol to write off $900 million from 2008 empowerment deal. Plus, Mozambique hopes to raise $500 million for renewable energy projects. Let's get started now. We're beginning with the markets in Africa, and major African markets were down at intraday today, with the Nigerian All Share Index still treading water at 0.31%. The JSE Index was down after data showed South Africa's headline consumer inflation quickened to 4.8% year-on-year in August from 4.6% in July. Egypt was also down 0.15%. In Kenya, the market closed up 1.18% on Tuesday. In the Middle East, the Qatar stock market extended gains today as local investors bought on price dips in an otherwise weak Gulf region. The Doha index rose 0.5% after 40 minutes of trade, extending the previous session's small 0.1% rise. But at intraday, it was trading 0.71% up. In Abu Dhabi, shares of Dana Gas were flat as about 10.6 million shares were traded, making up roughly 55% of the total volume on the Abu Dhabi exchange. London High Court judge on Tuesday adjourned a trial on Dana Gas and its creditors until Thursday after lawyers for the Abu Dhabi-listed company said that it was prevented from taking part in the proceedings because of an injunction by a Sharjah court, while shares of Qatar's utility company may rise on new solar plant project. Abu Dhabi index was down 0.20%. Dubai theme park operator DXB Entertainments rose 0.8% after its board approved an agreement with privately held Maras Holding and Maras Leisure and Entertainment for a $245 million subordinated shareholder loan. Dubai's index, however, was up there, down 0.62% at intraday. The Saudi index was down 0.50% as half of the top 10 most valuable shares fell, including Saudi Basic Industries, which was down 0.2%. In Europe, markets were mixed in early trade as investors observed heightened geopolitical tensions over the Korean Peninsula and awaited monetary policy guidance from the Federal Reserve. So what do the investors actually want from Fed? Let's talk to Daniel Koop, my colleague in Frankfurt. Good afternoon, Daniel. Good to see you again today.
Hi there, Jimmy, from Frankfurt, where everybody is taking a very close look what Ms. Yellen might announce later.
Sure, of course. Today being the big decision day. Now, what are investors looking for in the FOMC two-day meeting?
Well, I can tell you, Jimmy, there is this kind of mood here at the Frankfurt Stock Exchange where on the one hand, everybody is, rather nervous. The blue chip index DAX cannot really decide for, a direction. I guess you can see it very well in the background. Right now, we are even a little bit down compared to yesterday. But on the other hand, everybody pretty much knows what most likely she is going to say later. Most likely she is not going to talk about higher interest rates. That seems to be, at least for the moment, off the table, and insiders are most likely predicting that there might be higher interest rates at the next meeting in December. But they are talking here about a possible unwind of the 4.5 trillion bond portfolio. They're speculating and are pretty sure that this most likely is going to be announced later tonight, when, by the way, the market here in Frankfurt will be already closed. Because this is something very similar that they're asking Mario Draghi to do here, the head of the European Central Bank, just a few blocks away from where I am at the moment. But we know that he has not been in favor of this. He is following this policy of, buying those bonds, and also with the 0% interest rate policy here in Europe. His argument is always, that the inflation rate here in Europe is, still too high. So I can tell you, all the eyes will be exactly on every word Ms. Yellen is later going to say.
Sure, we're all keeping our eyes on Ms. Yellen on her speech later today. Well, staying in the U.S., this time looking at what's going on at the UN General Assembly. Yesterday, the U.S. President Donald Trump has issued his harshest warning of total destruction against North Korea's rocket math. What's in this hair-raising threat for the markets?
I can tell you, Jimmy, when I was listening yesterday to the speech of Donald Trump, I was actually thinking that markets would go down immediately and that we would have, to deal and also talk about a massive, minus here today at the stock market. This is actually not the case. People are focusing more right now about the Fed decision, and I was talking and having a very interesting conversation a little bit earlier with an investor about this, and he has been telling me that basically they are at the moment not used, to anything else. Basically, what Donald Trump is saying, he has been criticizing, North Korea already in the past. He has threatened North Korea also in the past with a possible upcoming war. So even those words were very strong last night, even saying that, that he might even completely destroy North Korea. Markets here in Frankfurt and also around Europe have reacted calm, more calm, as investors actually predicted.
Well, all I say after listening to Trump yesterday is just that he means business. Well done, Daniel. Let's look at the deal between Tata Steel and ThyssenKrupp, trying to create a leading European steel enterprise. How much will this deal upset both the American and the Chinese steel industries?
Well, this is a very big topic here today at the stock market. ThyssenKrupp, big steel giant here in Germany, also in Europe, trying to do this merger with, this company. And when you talk to experts, they are saying that they're actually thinking that this is a very good idea, because many steel makers here in Europe are having this problem with China producing steel at dumping prices and pretty much, bringing too much steel on the market. China has been sanctioned in the past already, now with import taxes, when doing, trade with Europe, but still they're having this excess production. China even announced in the past that they would even close up to 600 steel production facilities in China on the mainland, but still, those promises have not really been fulfilled. So experts are saying it's a good move to have this joint venture to be even more competitive on the market. Let me tell you also that politicians here in Germany are also having concerns, because with this merger, most likely in Germany, but also in the home of Taka, about 4,000 people are going to lose their jobs. The worker unions have been very skeptical. We have heard today also a statement from Germany's labor minister. She was saying that she is not really in favor about this, that cartel authorities will have to have a very close look on this merger. She's also not in favor that the new headquarters of the company would no longer be here in Germany. It would be in Amsterdam. So it's a move that investors appreciate. I can tell you, shares of ThyssenKrupp have been one of the winners here today at the blue chip index DAX with more than 3.5% plus. But politicians and worker unions are very skeptical.
Well, I guess the job cut area is the downside there, but it's a 50-50 win for both companies. Thank you very much for your time, Daniel.